Hey everyone, John Henry here from School of Trade. Today we're going to be taking a look at a fade off of the highs. Essentially, the buyers are running into a situation that they did not want to see this. Now, we do have to understand the fact that the buyers are in control ever since 3 o'clock. So we do have to give them the benefit of the doubt. So this is a counter trend trade. Because of that, I know the probability is a little bit lower, so we have to make sure that our entry to our targets are going to be much larger, 2 to 1, 3 to 1, more than our risk, right? Because we are going against the trend. But essentially, the reason why I'm going against the trend here is this big rally up here had just a beautiful run higher, and buyers were likely buying into every ounce of this. But then they started getting a little bit weak on the highs. They started showing that the buyers were running out of a little bit of steam here, and sellers were trying to push back against them. And then we ran into a situation where we broke out aggressively out of that little bit of a range that formed right there. And a lot of times, like we talked about on the Trade of the Day video yesterday, this is an ascending type pattern that broke higher, and it's very, very difficult for the market to hold and maintain that kind of movement because it's hard, right? You've gone up for the last 6 hours, 7 hours, and then you're breaking out to the upside above a pattern formation. That's not an easy situation to find yourself in, and the market corrected down aggressively. The buyers tried taking a back right here, this nice little rally that we had to the upside, but now they actually started looking like they're failing here as well. We had the buyers that tried taking it back, big slam dunk from the sellers. All the buyers managed to do is get above that big push down from the sellers for one candle, and then immediately seller pressure came back on in the form of a bear candle once again. So it's a relatively innocuous candle. It's not the easiest thing in the world to sell, but as you can see, a lot of traders are looking for the same thing here. We have a huge bull trend, but it doesn't look like the buyers want to buy this high anymore. Buyers aren't interested in buying all the way up here. They want to buy pullbacks. The most likely place that buyers are going to be coming in, obvious swing lows at the moment, right? Until they get more information. The most obvious swing low is this guy right down here. So that is going to be our objective, is going to be pushing the market down to that low. And we're going to be looking to take profit off there. Now, more likely than not, buyers are looking to get in underneath this swing low. So right now, I do consider 95, even though it is to the tick on the low, I'm considering it a front run of where the buyers want to get in. And notice the very important aspect of this. We know that we're going counter trend, so the probability is going to be inherently lower. So our risk, we're risking 43.20 up to 43.28. What's our profit though? 43.20 down to 42.95. Our risk versus reward is phenomenal, and that is exactly what we need to be doing when we're looking for a slightly more aggressive counter trend trade. So just a beautiful example of risk reward. Now we have to wait to see if the probability, 40% of the time, it works every time, right? So we're waiting for the sellers to drive the market down from our entry point at 43.20 to our targets down to the swing lows, where buyers are very likely to start scaling in once again. So we'll give the sellers a little bit of time, see if we can finish the job off. Sellers pushing heavily down here. We're actually nearing that objective now. We ran into a little bit of support resistance inside here. You can see it went from nice strong bearish movement into a doji, into a weak bear, but now we're getting the breakout back down again. Beautiful move lower, and we were actually filled to the tick. Now, that's one thing that I love about taking profit targets where you're expecting buyers or sellers to be getting stopped out. When traders are getting stopped out, it's much easier to get your targets filled, and that's what makes those areas so nice. Especially if you're a fund, let's say you're Goldman Sachs, and you want to buy in with a huge amount of contracts, well, you can't do it on a market order. You're going to stick out like a sore thumb. What better place than to wait for traders to get stopped out before jumping back in and using their stops to your advantage? Their stops are filling your orders. Beautiful move. That's exactly what we were looking for. Phenomenal risk reward on the trade to counteract the fact that we were going counter trend, and it worked out like a charm. So that's going to do it for me. If you have any questions about it, feel free to send an email to School of Trade. Don't forget to check out our trial at schooloftrade.com. And as always, we'll catch you next time.